What's going on, guys? If you're just tuning in, welcome to Digital Goatz Academy. I'm your host, the Digital Goat, or as many of you know me, Antoine Boatwright. Today, I'm just going to be looking at a couple of things as far as pertaining to the market, guys, that I'm looking at, some currency pairs that I'm going over, or what my potential projections are going into pretty much today, Thursday. I haven't checked any news on Bloomberg, or which I probably should have, or any news outlet that I use for financial gains, guys. So yeah, right now I'm looking at USD. Well, my main focus is going to be the dollar. I know a lot of us. Matter of fact, let's go into it. A lot of us have probably been having the expectation that the dollar is going into a recession. I have been, I guess, black sheep that's against that idea. I don't think that the dollar is heading into a recession yet. I do think that it is going to come in probably like the next 1 to 2 years, maybe like 2026, 2025, something like that, guys, where the market will actually be forced into a recession. But that's after we clear a lot of these highs within like the DXY. So again, my main focus is the DXY because when I was looking at the last time we had a recession, which according to my knowledge, that's 2008. Well, 2000, it started. If you were trading then, you probably would have been able to catch it around like 2004. I think that was like the high of the recession. And then by the time people knew that they were in a recession, that's when it was like 2008, 2007, 2008. But we were already in a recession then, guys, right? So my expectations is that, and I can kind of show you where we were at then. I mapped this thing out like a long time ago. Not the 12 month. I think I need to be on the 1 month. This is not my original chart. So let me see if I can find my other chart that has like all my info on it. So basically, I'm looking at some bullish momentum from the dollar. What's that going to entail? Well, if we get bullish momentum from the dollar, what is that going to do to currency pairs that are weaker than the dollar, right? If they're weaker than the dollar, we should see most currency pairs. So for instance, like USD CAD, right? If you were trading USD CAD or United States dollar against the Canadian dollar, which I'm pretty sure that's probably a good thing to trade right now, due to all the wildfires that they have going on in Canada, right? So say you're looking at the currency strength meter or the heat wave. Overall, physically, the United States dollar should be stronger or should be valued higher than the Canadian dollar. Now, this is just, I'm not looking at it right now. I'm just giving you guys like a synopsis, right? So if I'm trading USD CAD, that means that I'm looking for buys if the Canadian dollar is weaker or price lower value than the United States dollar. I hope that's making sense to everybody. So when I'm looking for, as far as the bullish momentum, I'm looking for the dollar to get stronger against other currency pairs. I'm gonna have to go to my whole other platform. Chart setup that I had, so I can see that information to show you guys where if I still got it annotated there. Hopefully, I still got it annotated there. Where we were in a recession, what the dollar did when we were into a recession, and if you were trading during that time, maybe you could have put yourself in a position to start selling, U.S. currencies or start selling your bonds, things like that, guys. Not going too deep into overall investing. I'm just focusing on the currency side of things. Once this thing is straight, why is it not? Oh, there we go. Once this thing loads up, obviously, I'm on my laptop, so I'm having like some delays just because of the feedback, and I'm on YouTube right now, and I hope my video is not messing up because of that. But just be patient, real quick, guys. That's what I'm waiting on. I'm waiting on this to load. Get out some of these windows. That may help. Let's see if I still got my annotations from there on where I marked the dollar going into a recession, where it went into a recession, and then where it's currently at now. Okay, so yes, this is the one where I still, you can kind of see how I had it marked up already, guys, right? So December, well, let's not even go into there. Let's go a little bit further back. So this is where the dollar got weak. This was right after, so I was correct, 2002. This is right after 9/11, right? Right after 9/11, let me see if I can find September. Where are you at, September? 2001, blah, 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 August, September. So this month created a bearish pattern right here. Oh, lost it. Where you at? Right here. But at the end of the day, it's still market structure. Even though this was triggered by a catastrophe, it's still market structure at the end of the day. So this is a doji, or what most people know as a dragonfly doji, right? Let me do right. Yeah, because I don't even want to. So this is a dragonfly doji, or you can just call this a regular doji. Most people say dragonfly, long leg dragonfly, because it's like super thin as far as like the structure. So where this box is, where this line is at, that's where the structure is, obviously. Here's the wicks. Here's the high and the lows that price tried to get to within that month. This is on the monthly time frame, right? So we can see that the dollar during 9/11, the dollar went as low as 111, 111.3, and as high as 116.1. That was just in the month of September, which, many of you know the trade towers got taken down due to acts of terrorism, right? So what happened after that? Well, the market actually rose. That didn't actually trigger us into a recession until February of 2002. Now, most people probably wouldn't have known we were going to go into a recession. Most people probably wouldn't have known that the dollar was going to start depreciating in value. Besides, if you were investing, understanding the impact that it had on the Twin Towers, guys, right? So most people logical thinking through trading is like, okay, a catastrophe happens, I should see the market straight flatline or start getting bearish from there. Absolutely not, guys. Again, this is where I emphasize like everything is market structure. Even if, I'm just kind of saying this for shits and giggles, but even if a piece of the world was a blow up, right? And humanity is still thriving and we're still trading, right? That's going to have an effect on the economy, which if it doesn't throw the world out of balance, and I'm probably going a little extreme though, but I want you guys to like kind of image what I'm trying to convey or whatnot. The market, as long as the market is going to exist, as long as banks exist, the economy is going to exist, the market is still going to give out market structure, guys, right? Because, what we've seen in history is that a lot of banks have had, issues that have happened in the past. You think about the Great Depression, they have prepared or they have had systems in place for them to pretty much handle, maybe not save themselves, but at least handle situations that arise, even if they're not completely prepared for it. So again, market structure right here, guys. In 2011, 9/11, September 11, guys, the market just created Dragonfly Doji. But then the market got bullish after that because why? Because that's still market structure at the end of the day. If you just look at this, what most of my traders understand, like, wow, what does this look like? It looks like a double top, right? Even without the knowledge of like the trade centers, most traders would understand that, man, that's a double top. So on a monthly time frame, double top on a monthly time frame, I could probably actually sell the dollar. Or what I can start doing is selling US related currencies or buying against the dollar. That means like pairs such as Euro USD, AUD USD, sometimes even gold, depending on the direction, guys. You see that, right? And even if you break it down even further, what does it look like? It looks like a break and retest. So doesn't matter what goes on in the world, as long as we're still going to have the economy, guys, it's still going to give us market structure. So I know that most of this stuff takes the exact time frame that you're looking on for you to depict it, but it's still going to give you what you're trying to see as a trader, guys. So during this time, the market actually started what? Selling off, right? So let me go back to a candlestick. Now, you wouldn't have known that you were in a recession until when? Like I said, guys, nobody really knew that they were in a recession till about 2006. That's probably when I just turned 18. That's probably when I understood that people were talking about recession. I didn't know what a recession was at that time, but that's where I understood that my peers, their brothers, their sisters, family members, neighbors and stuff getting laid off from their jobs, guys, right? During this time, right? So for me, if we're talking about a recession, right? If we're talking about us going into a recession, I would need to see price head back to some of these lows. Now that's pretty low. So obviously, if the market started breaking even this low over here, right, which was triggered in 2021, right? Then yeah, I would more likely, if I see the market head back down here, by the time it gets like right around here, yeah, more than likely I'm believing that we're in a recession, guys. Pretty much 98. It breaks past like 98. I'm believing that we're in a recession. But I do not believe that we're in a recession yet because we still have lows from previous years that the market has failed to break, guys. It's still hovering above. So even though you can say, oh man, this is a evening star right here, right? It's the evening star pattern, right? Normally that's a selling pattern. The market did sell. But what do we have? What do we must understand about evening star patterns or morning star patterns is that what do they have to do? Well, according to Fib, right, or according to market structure, any market that breaks out a previous low or a previous high has to return to at least the whole. I said the whole. It has to return to the low or the high of that market, guys. So when we look right here, just with this evening star pattern on the dollar, on the monthly time frame, it has yet to return at least 50% or to the previous high it created. Because as we just saw on the monthly time frame for 2001, what did the market do? It dropped down, popped back up in 2002 to create a double top, and then started selling off, which then triggered the recession. I don't believe this is a move to trigger the recession, guys. What I'm expecting is that once all this stuff clears out, what I'm expecting is that we're either going to see price become equal to this area up here, or we're going to see price back into these levels. In my opinion, we're going to see price back into these levels, which means what? That means that inflation is still here. Inflation hasn't gone away. Either way that you look at this is bad for the average person that's not really understanding what to do with their money. So, but because we know this information, what we could be doing. If we start getting clearer structure, we could be buying currency. So we could be if the dollar is rising in value, that means you might want to start selling your currencies or some of your investments on other currencies like the euro or the United Kingdom. I know for a fact, United Kingdom, you should not be investing in that currency. I'm not saying trading it, but I'm talking about any investments that they may have because their currencies are depreciating in value. So I do see the United States going up in value. Does that mean that that's about to make the United States rich? No, it's kind of going to throw the economy out of balance with that, guys, until it starts to stabilize again. But you can use this information to start buying and selling currencies. Buying and selling currencies as far as like trading in foreign exchange, guys. So that's what I'm looking at overall. The dollar, if you guys follow me, that's what I mainly talk about because I am in the United States. If I was in another country, I might focus on that country currency as well, guys. But if you just look at the overall movement of the dollar, it's still up. You know what I'm saying? It's still up. Even if it comes back to 97, it's still up. This was the last price that the market broke out of that it hasn't yet returned to, which is a previous high for the market to continue up. Now, will it return? If it breaks a little bit lower, then yeah, more than likely that's our key sign to the recession. But based off of what I'm seeing so far, guys, I'm looking at the dollar to continue rising to the top side. I've even been, trading pairs like I said, for instance, you guys just saw it just a second ago. Let me go back to it. Well, once this loads, USD JPY. So Japanese yen. I know Japan overall, their country's currency is just doo doo right now. They're basically doing everything they can to trigger some positivity into their economy, but the yen has just been failing. It's just been falling on deaf ears. But you've been able to take probably like short buys until it gets to the breakout phase and then starts, shooting up. But again, either way, guys, inflation or recession if we're triggered into either or, it's still bad for us. But what do you do with that information? Use this information on what I just told you guys and start trading it in your in your MetaTrader 4 or whatever platform you use to trade foreign exchange. I'm gonna show you guys that last night I took a buy from USD JPY, and we're still in profit right now, based off of what I was looking at in correlation to the dollar. Is that making sense? Pretty straightforward, right? Now, obviously, this isn't my MetaTrader 4. This is TradingView. So if you're new to this, then you might be saying, well, how do I take a trade based off this information? But you got to go to MetaTrader 4, guys. But if you're looking for mentorship or how to trade, definitely contact me. If you guys have IG, you can follow me on that's THEE, Digital Goat, DIGITALGOT, the digital or the digital Goat. So that's two E's, not one, to emphasize the, right? So right here where my blue, let me go to our time frame. So right here is where I caught the buy. Again, guys, we just hit a level of resistance. What we want to see is price to break through that level right here and then continue up and then give us a retest after it breaks out. But if it doesn't break out, it may still be wanting to test like lower areas down here. We are heading into opening bell in like 7 minutes. So whatever happens, we'll see based off of that information. But if you get a breakout to the top side, for all my traders that are watching that don't need any guidance with MetaTrader 4, because you already know what to do. If we're looking for a position to buy, what we want to see is price pretty much do a number like this. And obviously, it's not going to be exact. You know what I'm saying? So don't think it's going to be exact. It's like ballpark area, you know what I mean? And that emphasizes the break, and we want to see, we want to see it in a sequence kind of like that. We don't want to see a double top, because what would that spell? That would spell the dollar actually continuing to push further down than we anticipated, right? So we want to see something close related to that, and then that'll pretty much be your move to take the buy. You get your breakout, hopefully 9:30 triggers the move up, and then probably like 10 o'clock, 10:30 or 9:37, maybe within that 7-minute move, price to shoot back down and give you another buy zone, and then you take it from there. So this isn't like telling you guys the exact area to like buy. I'm just giving you guys, an overall thought process on, okay, once I see a break and it comes somewhere back into my zone, somewhere back close to where it initially broke out, which is like right here, then that would be your area to buy, and then you'll figure out your stop loss from there. I normally tell my team, like, depending on the pair, I know some pairs you're going to have to do 100 pips, but depending on your risk level, depending on the pair, how hard you're going in, obviously with like Forex pairs, I say, and I mean like Forex pairs such as like USD, JPY, it doesn't pay out as much as other major pairs. So you can kind of stretch your stop loss, but I say no more than like 35, 40 pips. If it were if it was the hit, your stop loss based off of that movement right there, and obviously we were completely in the wrong direction, which is okay. We'll reset, analyze, and then go from there. But you see, it's like, triggering the move down. I don't normally like get ahead of myself. I would like to wait for it to see some structure. This is not like clear structure. This is no man's land. And then once it breaks up out of here, guys, if we get that breakout, is what I'm anticipating, we'll have another potential entry to take the market up. If you look at it, this kind of looks like a baby inverted head and shoulders. But I don't like stating head and shoulders just because I'm terrible at identifying them. You got to know your weaknesses. You know what I'm saying? Better. That's better. Probably like, dude, what are you doing? Bear with me. Pretty straightforward though, right? So if you see, this could potentially be the left shoulder, this could be the head, this could be the right shoulder right here. And that should take the market up at least to the next previous high or potentially the previous low. So what I would probably think is that the market will probably come up here, start showing some resistance. And then if it continues, it'll be like with another retest, guys. So right here is probably your first area where the market, like I said, hit like a roadblock or hit a point where it wants to struggle to break through. And then, kind of play around, probably push back down here or something like that, and then break through. Pretty straightforward, like I said, but that's just what I wanted to give you guys. Also introduce that, Digital Goatz Academy is about to be live in 10. It's about 12 days. 12 days we're going live. This is paid. This is paid services, guys. So if you are interested, like I said, you can reach out to me on my social media. That is at the Digital Goat. That's on Instagram. You can reach out to Digital Goatz on Facebook, or if you guys can message me. I'm not even sure if YouTube has messaging that or comment underneath the video, guys. Reach out to me in some shape or form or whatnot, and I'll forward that information to you guys. And just understand it's just about education. It's not a way for you guys to necessarily like, well, you'll make money, but don't think that you're signing up for something to make money, guys. You're signing up for education so you can use the information that you're getting to make money on your own, guys. So that's my biggest thing because I do believe trading is something that should be like a household thing now. So if you're not on board with it and then you have dreams of, being a millionaire or, entrepreneur, I feel like you're already starting backwards, you know what I'm saying? So investing is one of the things that's going to put you in that category, guys. And I hope you guys learned a lot, man. So I will see you on the next pop-up session. Again, reach out to me, guys. That is the Digital Goat, and that is Digital Goats on Facebook. So IG is the Digital Goat, and on Facebook, Digital Goats. But as well, guys, if you found value in this information, make sure you guys drop a like, hit that subscribe button, and stay tuned in with that notification bell. And I will see you guys on the next session. Be blessed.